Are you in the real estate sector? Do you have an asset somewhere? Do you have people who are paying current market rates? It's almost the end of the year. Should you be kicking them out and looking for people and looking for a higher yield just because the rate cap has actually been removed in totality? Now that's the question we want to answer today. What's the upside for the real estate sector? How should you position yourself if you're already in it and if you're looking to get into it? With us in studio is Wacu Mbugua, an analyst at Cytonn. Wacu, before we took the break, we analyzed the context of pricing and context of demand. Now we want to look at the future outlook. What does it now mean now that the rate cap has gone? When you're doing your analysis, I mean, you sound very excited, very positive, but then you're also cautiously optimistic. It will take some time. What are 1, 2, 3 considerations that somebody who's invested in this sector or wants to get into this sector should look out for today?
Definitely for any potential aspiring investor, the number one thing is research. Do your research well, know which areas actually might have potential for demand now that the cap has been repealed.
So which areas are these?
Right now with the affordable housing topic, and I think it's like the main concern right now in Kenya. So I think especially the surrounding satellite towns, be it areas like Raka or at the river or Kiambu, because these areas are actually like dormitory towns for Nairobi.
So
you can
Raka,
work here.
at the river, okay, so Raka, at the river and Kiambu.
Yeah, I think those areas will continue to exhibit high demand for as long as people are working in Nairobi.
Okay.
And the working class and all that. In terms of the high-end and upper mid-end areas, right now there's this notion of serviced apartments and furnished apartments and all that. It's gaining traction. It's a market that is gaining traction.
Okay.
You know, targeting those foreign expats who are here for 2 weeks, 1 month. Instead of staying in a hotel, you'd rather stay in a serviced apartment. And also, in terms of the commercial sector, I think the opportunity is in those nodes that are not oversupplied.
Such as?
So like in the office sector, I said that areas like Nairobi, CBD and Upper Hill are oversupplied.
So CBD being the central business district, okay, so those are oversupplied.
Yeah,
so
and now companies are interested in areas that are not overly congested, they have good infrastructure, they're still accessible within other nodes. So areas like Karen, Westlands, Gikiri and Limuru Road, they still record very high rent yields. So if an investor needs to invest in that sector, so they can look into such areas where there's still a lot of demand and a lot of say foreign experts coming in and showing interest in such areas. In terms of the retail sector, I think right now we are moving towards this trend of mixed-use development, and actually that cuts across all sectors.
So mixed-use, you have shops at the ground floor, and then you have apartments higher up.
or even office, or you can even have like a huge project that has all sectors within, say, residential, office and retail, such as especially with this trend of live, work and play, where people want to live here, you want to work here, and you want to be able to maybe shop and you know, the play concept within the same environment. Yeah, so there's that growing trend of mixed use development. Yeah, and so for the retail sector there's that, and also looking at towns where there isn't a lot of mall supply. So in Nairobi we're seeing a lot of malls all directions, but then there are these areas where the GDP per capita is quite high, but the mall supply is not as high.
It's not as that's a fair way. And I think as you're talking, this has just come to me. So you did say that the glut that we have today is from projects that started maybe prior to 2016, 2017 latest. And then because of the rate cap, there was nothing much happening in terms of new projects that are coming up. Now, of course, with access to credit, there could be another cycle of developments that could start maybe in a year or two. And to me, when I look at it in that way, it means that maybe in less than 5 years, then there should be an expectation of a recovery in returns from the real estate sector, because the new people getting the money in from the banks will have to charge a price that is commensurate with the cost of credit. I don't know what your views are on that.
I think right now, although I don't expect developers now that there is maybe hope for more credit to go back to areas that are oversupplied. So what you'll find is, yes, they'll definitely charge rates that are commensurate with the cost of credit. Hopefully it won't go very high.
Would you be telling developers to Would you be telling developers to take credit and tap into the Big Four agenda now that there's sort of a disruption in the economy?
Yes, definitely. That is what they should do, especially in Kenya, because alternative sources for financing for developers are not very many.
Okay.
So I think that's the one option that they have. Either you get debt or you finance your project, which I think is very rare. So definitely that will play very well for developers, and they'll be able to tap into this ongoing trend of affordable housing, mixed-use developments, and all that. And definitely, like a stimulated economy definitely will attract foreign investors. So we expect that there's going to be local stimulation, international players coming in, and then stimulating the whole sector, and maybe the performance and the yields will definitely improve.
All right. Yeah. Maybe my final question. We have seen a press statement alluding to the fact that ICEA wants to buy the assets that are owned by Stanlib Irate. What are your views on that? And if I'm an investor in the Stanlib Irate, now that they want to change their mode of operation, what happens to you as a shareholder on it, on the Nairobi Securities Exchange? What happens to their assets? I don't know if you have any views on this news.
I think that if ICA bought property, because there is also this regulation for IRATES to have a minimum of their capital invested in properties.
Okay.
So they cannot just sell their real estate properties and remain without.
All right.
Yeah.
So they would have to buy the entire structure, the Stanlib Irate, and then maybe call it ICEA Irate.
So unless they are transferring the whole structure to ICEA, of which I think it's a good thing, maybe they'll be able to make it perform better, because right now it has always been on a decline since its initial offer.
Yes,
so maybe they can be able to do something to turn it around. But mostly the reason why it's performing badly is because of poor investor perception. Maybe they can be able to do something to turn that around. But right now we're seeing that a lot of real estate firms and obviously a lot of investors are now looking towards alternative ways of investing in real estate, and definitely a rate is one of the things. And if you look at markets like South Africa, where the rate market is a bit better, it's actually a very good thing, because now developers don't have to solely depend on bank funding for their properties.
Exactly.
So it's a good thing.
Even for you as a retail investor, because I did, just before this transaction happened, we had looked at it as an investment opportunity. It's yielding about 8.8%.
Yeah, which is actually better than office yields and retail yields. So it's a good thing, and you don't have to, it's not really highly capital intensive compared to brick and mortar. So it's a good thing for everyone, developers and aspiring real estate investors.
So that could be a new opportunity to get into real estate, depending on the structure of this. Is there anything else that you'd like to bring out in the show as we come to a close?
Not really. We're just hoping that the real estate, now that the interest rate cap law has been repealed, that we're going to see a lot more private sector credit growth, which will stimulate the sector and put it back on track.
On an upward trajectory.
Yes.
Thank you very much for your time and your sentiments as well as your insights. That was Wacu Mbugua. She is an analyst with Cytonn Investment. She's very optimistic, cautiously optimistic with regards to the real estate sector on the back of the rate cap removal. What are the opportunities there? What else can be done there? It's going to be a gradual uptake with regards to demand as well as asset yields, but it looks like it could be a very interesting opportunity for you to do a bit more research, and certainly her house as well as her team are the people to speak to if you want to get into that space. Thank you for joining us this week. Next week, we want to continue this conversation on the rate cap repeal. What does this portend for the different industries, whether it's manufacturing, consumer, construction, whatever other sectors are there? We have seen the uptake on the banking sector stocks. Is there another opportunity for you to allocate capital and earn a good return? We look forward to hosting you next week on Monday. But for today, from us from here on Markets Today, thank you once again and good afternoon.